We need like music for the beginning of this.
Just thinking that. Some
Really?
Intro music. Next time.
Hey everybody, just getting everybody logged in. Hope you're having a nice Tuesday. Good, we're still waiting on about a couple dozen people. All right, how are we at it? We're at 93, all right. We'll give it 2 more minutes until we start. So nice to see a bunch of repeat people attend these webinars.
Amber, do you have Facebook open?
Sure do.
Somebody saying she didn't get the link. Probably for Zoom. I don't know if we have that. Let me see.
It has to be registered, so everything is separate.
Hey, 1 more minute, guys, and we're gonna go on. Welcome. Another exciting day in COVID world.
It's Coronaville.
Coronaville. All right, 10:32, we're gonna get started. Hello, I am Erin. I am one of the owners of Strätlign. My husband Jake is on with us. He's also the other owner. We are a full service accounting firm. I guess you'd call me a 3rd generation accountant. We took over from my parents or started working for them 15 years ago. They started their practice 40 years ago, and now we sort of run both of them, and we focus on small businesses, helping them, you know, solve complex problems with hopefully simple solutions, tools, resources, education. Namely, we've been staying on top of the CARES bill, Families First bill, all the stuff that's come out since COVID-19 crisis hit. So pretty much all I do and my team does is study the CARES bill and the legislation that comes out, which is very exciting. We have never seen this kind of situation happen before, obviously, and we've never seen this type of tax legislation change, or whatever legislation you want to call this, so frequently on a regular basis. So with this webinar, what we're doing is we're going to be going over the forgiveness portion of the PPP loan, as well as I'll touch on lightly about the actual PPP loan, because they're obviously go hand in hand. But I'm going to preface this with saying that a ton of guidance has not been issued. And however, people have received funds from the loan. So we are doing whatever we can based on the information that we have to provide the best information possible that we believe is the right way to go. And the way we're interpreting it right now. Hopefully they'll issue guidance as soon as possible. and clarify a bunch of items, but we all know how quickly the US government works. So with that being said, I'm gonna go ahead and get my PowerPoint up. Bear with me one second. All right. So, all right. So PPP forgiveness, this is about maximizing Paycheck Protection Program, the loan that you received or you applied for, or that you've been approved for and have not yet received. A couple housekeeping items. All questions need to be asked in the Q&A section. Sorry, I just got distracted. I probably should turn that off because I get distracted by things that pop up and shiny things. Anyways. Should be asked in the Q&A section. We'll answer them as we can. You can raise your hand when we get to the open forum. We'll have a Q&A section at the end of this, and we will unmute you when it's your time to speak. We will have these slides available as well as the recording of this webinar. As soon as we get off this, we will email it. By the end of the day, we'll have it available on our Facebook group, the Straight Lines Business Owners Survival Guide. Amber will actually chat those links out, that link out to our Facebook page and our group. We do recommend people join it. We've been trying to post things there multiple times a day about any updates we have regarding business, maybe unemployment, pretty much everything to go along with this and really any other business thing. So again, all this stuff will be made available by the end of the day today. All right, so our agenda today is we're going to go over the loan forgiveness rules for the PPP. We're going to understand how the loan forgiveness amount could be reduced, steps to take to maximize your forgiveness, and what happens if you don't qualify for forgiveness. So as always, please, this is not legal advice and should not be taken as such. Again, for legislation and further guidance for many of these items are still unclear and pending. You will see this disclaimer at the bottom of many slides because many of the topics I have to discuss have not been clarified yet, unfortunately, but it is what it is. If you do have any questions specific to your business, you can contact us directly or the professional that you're working with. I'm going to bounce because I just put those slides out of order. So I'm going to actually go to this one first. So the PPP loan and forgiveness, in our opinion, just sort of putting our disclaimer out there, we believe the PPP loan is a great opportunity for businesses to get some cash, get them through the next 8 weeks or 2 months until things pick up and we are allowed to open up again. But we only believe this if you are taking the necessary steps to maximize the forgiveness. The last thing we want people to do is take on this kind of debt during this type of period and not be able to pay it back. So we do believe it's a good opportunity. I don't think we'll ever see anything like this again from the government, just basically handing out money. But unless you are taking the steps, you're prepared to maximize the forgiveness, it will not be a good idea to take this loan. And if you have received it and you are not prepared to take the steps necessary to get maximum forgiveness, we recommend that you actually pay it back. So the difference between a $100,000 loan, so let's just pretend your loan, PPP loan, is $100,000, and a $100,000 grant is how well you plan and document your spending over the 8-week period. I cannot reiterate this enough. You are getting tens to hundreds of thousands of dollars essentially for free. You must take the steps and the time necessary to understand the forgiveness portion and to plan it out and to make sure you're doing the right things. The other things that we have in our opinion are banks will be the ones processing the forgiveness applications, and we do not know how they'll interpret the legislation. If any of you dealt with a bank that gave you the wrong information to provide with the PPP applications, you have experience with this, they sort of just do whatever they want based on whatever, I guess, their attorneys are telling them to do and their interpretations of the guidance. So we're going to go through all this, give our recommendations. Ultimately, you're going to be at the mercy of the banks, and what they decide is going to be good for the forgiveness. But the suggestions we're making are very conservative, and what we think at this time are the right ways to go. So I'm going to go back a slide. So the loan forgiveness rules. Borrowers are eligible for loan forgiveness equal to the amount the borrower spent during the 8-week period beginning on the date the loan originated. So if you received $100,000 today, you are eligible for 100% forgiveness if you take the necessary steps to spend the money correctly and document it and have the FTE count and all that stuff. Not more than 25% of the forgiven amount may be for non-payroll costs. So what that's saying is at least 75% of your loan amount, loan proceeds, have to be spent towards payroll costs. Okay, so when you applied for the PPP, the payroll costs included wages, compensation, salaries, state unemployment tax assessed on wages, employer match for employer contribution for a retirement plan, and employer contributions of health insurance, vision, dental. So those are what's considered payroll costs. You must spend at least 75% of your loan proceeds on that. You can spend up to 100%. It's totally fine, but you cannot spend less than 75%. The following items qualify for loan forgiveness. We'll go over into this a little bit more detail, but payroll costs, including benefits, like I just stated, interest on mortgage obligations incurred before February 15th of this year, rent under lease agreements enforced before February 15th of this year, and utility costs, including electricity, gas, water, transportation, telephone, and internet. We have not gotten clarification on what transportation means yet. We're still trying to figure that out. I'm assuming it's a transportation cost for the utility company when that you see on your bill and it says transportation, but I'm not really positive. So I just went through this, the payroll cost defined again. So if you haven't applied for the PPP loan, this is what you're using to determine your PPP loan amount. It's salary, wage, commission, or similar compensation, payment of cash or tip, payment for vacation, parental, family, or medical sick leave. Sick leave, it's not inclusive of the sick leave if you got the employer credits for the family first, but just like a normal sick leave. Allowance for dismissal or separation, which is severance pay, and then the employer portions for group health care, employer contribution for retirement plan, and then the payment of state or local tax assessed on the compensation of employees. If you're Massachusetts, that's your state unemployment tax. If you are contributing to the Mass PFML, that kind of stuff. So that's what you were using to calculate your PPP loan. Now that's what is considered as payroll costs for spending the money, the 75% of the PPP loan. Excluded payroll costs. Now this is where people are getting confused. Compensation of an individual in excess of an annual salary of $100,000. So some people have thought that you completely exclude people that make $100,000 or more from the payroll costs. This is not true. You exclude the excess of the amount of $100,000. So also included with that, which is confusing, is the employer contributions to healthcare, retirement benefits, and the state tax assessed is not counted towards that $100,000. That's above and beyond. So if you have somebody that makes $150,000 annualized, you're allowed to use the amount of the $100,000 plus the other costs. The other thing you do when you do apply for forgiveness is you have to take the amount. This is a very confusing calculation. And just to let you guys know, I am not getting into calculations during this presentation because it's way too confusing. There's really no way I could explain easily the calculations. But when you're doing the calculation for the forgiveness, you do need to figure out the employees that make over $100,000 over your 2020 calendar year, then exclude, you have to average the amount and then exclude the amount over $100,000. I'm already confused, but that's fine. So we can, if you have questions about that, you can always set up a time to talk to us. The other thing that is not included that people are probably not really aware of are the employer portion of payroll taxes. So it's mainly the federal payroll taxes. So the amounts that are not forgiven is the employer portion of the Social Security and Medicare tax. So that's 7.65%. And then employer federal unemployment. So to be clear, the only amounts that are forgivable in the payroll costs are the gross pay of the wages plus the state tax assessed on wages. If you have a payroll, you are still responsible for the employer portion of Social Security and Medicare and the federal unemployment tax. I want to be clear on that. Some people are going to be very surprised. So also not included is any compensation of an employee whose principal residence is outside of the United States. And then qualified sick leave, which is a credit, is allowed under Section 1. So basically, if you did any type of, took the employer leave paid leave and the credit for that, that is not included. That was the second bill that was passed under the Families First Act. Most people have not done that, but you cannot double dip essentially and get employer credit for sick leave and then also for the PPP. Okay, well, we're doing polling questions. This is to help us understand what else we should be focusing on for education, and also it's giving us an idea of what to do. If you guys wouldn't mind answering the questions, what is the current status of your loan? It's great to see a lot of people have actually received the funds. Just give it
While
like,
we're waiting, there are some questions in that.
oh, let me see. Let me see if I can attempt. Here we go. Overtime pay, the pay itself is included, but the hours are not included for the FTE calculation. Robert, so overtime pay is included, but not the overtime hours. Can an employee refuse to be put back on payroll because they're collecting more? Sure they can, but then you can call up the state unemployment and tell them that you offered them offer them work, and then the unemployment will stop. They have to stop the unemployment. So if you offer your employee a job and they say, no, I want to stay on unemployment, you call the unemployment and they have to stop unemployment. Melissa. My bank wants documentation for my loan to proceed. What documents? Sorry, these things are popping around, so I don't know where that happened. Are they looking for? I don't know. It's up to your bank. Every bank is asking for different information. If I know what bank you have, I might be able to help you, but when in doubt, it's going to be like a payroll journal for the time period that you chose to use for the PPP loan, 941s for that period, probably proof of state unemployment tax, and then you might have to provide proof of health insurance paid and employer match. But every bank is different. Some banks are just asking for one report. So, if we had been approved for PPP funds, we'd still be able to get the second round of funding if the second round goes through. Corey, I don't think so. You apply once, you get it. That's it. Does the PPP only apply to full-time employees? If you are not deemed essential and applied to be essential and are still working, would you be denied forgiveness? The PPP, the calculation for a full-time employee is a calculation. So it goes into basically the lower your calculation for full-time employee is, the better, because then I'm going to get into full-time employee calculation soon. So maybe I'll come back to that question. Okay. I'm just going to keep going because there's a lot of questions.
Yeah,
just keep going.
All right. Okay.
We'll go ahead and share the polling question.
All right. And polling. So right now we have applied and waiting on approval. That's 36% of you guys. Approved and waiting on funds, 29. 30% have approved and received it, and then 5% of you have yet to apply. So great. All right. Move on. Lassie, is that Lassie? All right. So we're getting into the 8-week period now. So expenses, this is where a lot of questions come up. Expenses during the 8-week period. So like I said, the money has to be spent, or the 8-week period starts, I should say the 8-week period starts the date that you receive the loan funds. So the current guidance is not clear on this yet. Is it costs incurred during the 8-week period, which is also called accrual-based accounting? So what that means would be it's as pay period. You have a pay period, which is let's say it's last Sunday to Saturday, but you do a check date of this Friday. Do you count last week's pay period, or do you count this week's check date? We're not sure. Costs paid during the 8-week period, which is cash basis, so that basically the checks that you cut during the 8-week period are the expenses that you're counting. Again, we're going to go on conservative and also just assume that the banks don't want to deal with accrual type of accounting. And we don't know this answer for sure. This is our best guess and estimate is, and basically the safest side is we are going with cash basis. So what we are saying to our clients and ourselves is all costs must be paid during the 8-week period, including all payroll costs. So that means we're going off of check dates, not pay period dates. So if you have rent that has to be paid, even though it covers, let's say you get the loan May 4th, but your rent came out May 1st, we're assuming that's not counted. So we are gonna go ahead and assume that the banks are gonna want copies of checks, canceled checks, bank statements, showing the actual expenses paid during that 8-week period. Hopefully they give us some more guidance on that very soon. Okay, the FTE count. Again, there's quite a lovely calculation that goes into this, and they actually haven't even defined what the calculation should be used for. Do you go after what the ACA was off of 30 hours, or do you go after what the Department of Labor is, which is 40 hours? For our clients, we went off of 40 hours because this is not the ACA, Affordable Care Act. But what we do know is that during the 8-week period, which is called the covered period, you have to maintain the same level of full-time equivalent employees based on the calculation. So what you do is you take one of these periods. So if it's 1/1 to 2/29/20, you figure out how many hours were paid to all of your employees, excluding overtime hours, how many pay periods you had during that period, and you divide by the number of hours for those pay periods. So if I had 4 pay periods, it's 40 hours per pay period. That's 160 hours. I take the total number of hours paid for all of my employees divided by 160, and that gives me my count. So we don't know yet if the banks will use the average number of full-time equivalents per month employed by the borrower from 215 to 630, or the average number of full-time equivalents per month employed by the borrower from 1/1/20 to 2/29/20, or the average number of full-time employees for the pay period ending 2/15/20. I understand this is confusing. What we did for our clients is we used the 2 periods, the first 2 periods. We calculated what their full-time equivalent was, and we chose the lowest amount, obviously, because we want to get the lowest count. We are also calculating the full-time equivalents for the pay period ending 2/15, not the check date 2/15, the pay period ending 2/15. And as of right now, we're using the greater of. So whatever period calculated the most, we're actually going to use the greater of. You want the lower count, but I'm afraid the banks might come back and make their own rules and choose whatever period they want. And I would rather be on the little higher end than the lower end and have have more of the loan forgiven than less of the loan forgiven. I understand this is very confusing, but that's why we're doing this. And I wish I could provide a little more clarity. Again, I just said this is where we're very unclear, and we just believe the banks might be doing whatever, and you can ask your bank what FTE they're going to be doing and get that in writing from them. I don't know if they'll give you the answer, but the best I can say. So there is an exception to the full-time equivalent. So what this means is a lot of people had said, well, I laid off people between February 15th and April 26th. Can I get the PPP loan, or will I qualify for forgiveness? Yes, you will. It's okay if you laid people off and then you brought them back. That's okay. As long as the employer has eliminated the reduction in full-time employees and the reduction in salary and wages by 6/30/2020. Is this confusing? Yes, because again, we are told that we have to maintain the same number of full-time employees during the 8-week period as a look-back period, but then we also are told that we have to eliminate the reduction in FTEs as of 6/30. So which date will they look at? Will they look at the 8-week period, or will they look at 6/30, or will they look at both? We are not sure, but right now we're just trying to do our best and do the 8-week period to match, like I said in the prior slide. That's what we're doing, and that's pretty much my input on that. All right. So for the loan forgiveness process, based on current guidance, it appears borrowers will need to provide documents that verify full-time equivalents and pay rates, as well as payments on the eligible mortgage, lease, and utility obligations. Documentation will also include, payroll tax filings from the state and the IRS. We expect the banks to ask for copies of bank statements, copies of checks, payroll records, payroll tax returns, and all that fun stuff. The loan forgiveness will be processed to the lender that you got the PPP loan through. The lender must make the decision on forgiveness within 60 days. So my understanding of these loans is they are issued the funds. They have to determine your forgiveness portion, and then the SBA actually will give them the money back to pay, for the amount of forgiveness. So that's on the bank side there. So the unforgiven portion of the loan, if you do not get the full amount forgiven, the loan payments will be deferred for a minimum of 6 months in the event you do not have to pay on the loan. Interest will continue to accrue during this time. So even though you don't have to pay for 6 months, interest will continue to accrue. And I was doing rough calculations. I received a note from my bank, and the note says the 2-year period starts from the date of this note. So I signed the note on April 10th. I have not received the funds yet. I have to start making loan payments on the 7th month from the date of the note. Again, I have not received funds yet. So technically, I have to start paying back the loan if it's not forgiven within 6 months of the note date, not the amount I received the funds. And then the payments, and it's still due 2 years from the date of the note. So technically, if it's not forgiven, this is how I'm interpreting this, or any unforgiven portion, you technically only have 18 months to pay the note, not 2 years, 18 months. So I know that's probably confusing, but that's how I'm reading it based on the loan documentation I received and a couple other loan documentation I reviewed for other clients. Any amount of the loan that is not forgiven must be repaid, and there are no prepayment penalties. So let's say you determine that you're not going to be able to use the entire loan funds, just stick it aside and put it in an account, and then you can just pay it off, when you're done with the 8-week period. Why am I echoing? And again, it's a 2-year term at 1% interest as of right now. I don't know when they do the second round of funding, I don't know what terms they're going to do, what interest rate and all that. We have really no idea. Okay, we're going to go to another polling question. I'll review the Q&A again. Okay. So people are asking questions about sole proprietor. Unfortunately, we're not really going to discuss sole proprietors today because there's barely any guidance about the forgiveness portion on sole proprietors. I wish I could give you more information. I have tried to do whatever I can. I have a group of really close 10 other accounting firms across the country, and none of us have any idea really what to tell people regarding the forgiveness. There's some guidance, quote unquote, on it, but not true guidance, I guess I would say. So unfortunately, I cannot provide information for sole proprietors or contractors that apply for this. Is someone doing a poll?
Erin, if you could turn your co-host back on and stop moving for a second.
I can't hear you. Okay, I'll just launch the poll. How are you planning and budgeting your loan funds? So while that's going on, I will look at more questions. What is the date range for payroll? Is it pay for hours worked after disbursement or paid? Julia, I don't know if I went over this before, where we're going off of. I'm not really clear on your question, Julia. I think you mean during the 8-week period that you received the funds. We're going off of when you write the check for the payroll itself, not on the pay period that when they work, the hours worked. But again, we don't have exact clarification, but that's going off on the conservative side of that. Okay, Jess, if I did not include owner draws in my application, can I still use them towards, Jess, I don't know what kind of, Jess Forte, I don't know what kind of entity you are. If you're an S corp, owner draws do not count towards this at all. If you're a sole proprietor or a partnership, it's different. I had an employee quit on 4/12. Obviously her hours were calculated in my PPP application. Can my employee make up those hours of the employee that quit? As long as, my understanding is, as long as the hours average whatever your count was before equals it, then it doesn't, like if you had an employee working 20 hours a week or 2 employees working 20 hours a week, one of them quit and you have one of the, the other person that stayed work 40 hours a week, absolutely. That will count towards your full-time equivalent. And you can hire people to replace people that don't come back. This bill is intended to hire people. Are there restrictions on how the EIDL grant money is used? It's just gonna reduce the amount of the forgiveness of your PPP. You can use it. You can't use both for the same purpose, Meg. So kind of, but not really. It's kind of a. So if you receive the EIDL grant in advance, and let's say you got $2,000, yes, you can use it for the payroll, but that portion will not be forgiven because they're reducing the payroll amount. It's the purpose of the loan itself and the grant is to use for other costs for your business. Okay, I can hire my employees back for the 8 weeks, but I'm certain my business will not be up and running within the 8 weeks. Then I'll delete everyone off again. How would that work? It seems like a bad idea. Diane, I agree. That's actually one of my questions. What if you hire these people back for 8 weeks? And that's before, let's say the 8-week period is up June 15th. You don't have the work back and then you have to lay them back off. So your full-time equivalent is down again as of June 30th. I don't know the answer to that. That's actually one of my questions as well. Hopefully that's not the case, but all right. Okay, so on the poll we have, I'm gonna end it. It says, how are you planning and budgeting your loan funds? Attempting to handle these myself is 55%, hiring a pro, 19%, not planning in advance is 0, thank God, and not yet decided, 25%. All right. All right, I'm gonna move on. So I know there's a lot of questions that everybody's asking, and a lot of these are very specific to your business, and we can't really go into every single one. There's a lot. There's 29 questions open right now. Jess Forte, what if I only have part-time employees, 15 total? Again, you have to do the calculation for the full-time employee equivalent. So if you don't know how to do that, please give us a call. Can the number of employees on payroll increase from the 2019 period that we submitted? Employees can absolutely increase them. That's great. Increase the employees. Okay. To clarify, is there no forgiveness if you don't have the FTE count? Anna, apologize. I will be going over that shortly. There's a calculation, but no, your forgiveness isn't just completely removed if you don't meet all the qualifications. There's calculations for phase outs. All right, I'm going to continue. So the steps you should take now immediately is to plan your 8-week period right now. So if you've already received the funding, your planning should have already commenced, or you need to do it right now, immediately today. Again, the 8-week period starts the exact day you receive the funding. So if you're working a professional, you must notify them immediately when you receive the funds, the exact day and the exact amount. You might have put something on your application, but the banks are not giving those exact amounts. They're rounding up or down. And so we need to know the exact amounts. The next thing you need to do is determine what 75% of that loan amount is that must go toward payroll costs. So if you got a $100,000 loan, $75,000 immediately has to go towards payroll. You want to set up a separate bank account if you haven't already. Put the funds in the separate bank account. Again, the more transparent you can be with the use of these funds, the better. I do not anticipate banks making the forgiveness application itself an easy process. So the easier you make it to start with, the better. Okay, you also want to determine how many employees you will rehire, their wages, and the hours that they will work. So you're going to project out over an 8-week period to see if payroll costs will meet at least 75% of your loan amount. Again, they can exceed the 75%. They can go up to 100%, but they have to meet at least 75%. Project out over 8-week period to see if your employee count and hours anticipated will equal your chosen look back period for the FTE count. Then you want to determine the amount of other costs you have to cover the remaining 25% and forecast out the expenses over the 8-week period. So again, you want to make sure if you're using rent and other things that you're paying them within the 8-week period. So if you have automatic payments set up, you might want to turn them off to make sure that you're getting it during the 8-week period. And that goes for health insurance and all that. So even though you're accruing, like each pay period, you have a portion of health insurance that's going towards, you know, your employer portion that goes towards your employees. Just having that on a payroll report, in our opinion, is not good enough. They're going to want to see a copy of canceled check or something that hit your bank account showing the actual payment of the health insurance as well. And then also notify any furloughed employees or new employees that they'll be returning to work and taken off unemployment. Again, Diane already brought this up. There's probably going to be pushback from your employees. Some of them might be actually making more on unemployment than they would if they're working for you. That's it. That's something you're going to have to deal with. But as an employer, if you offer a job back and they refuse, you can contact up mass unemployment or whatever unemployment you have and tell them that you offer them hours, and they will immediately stop getting paid from unemployment. So the next thing you want to do is determine how many check dates you will have during that 8-week period. So again, we're going off of a cash basis, quote unquote, approach here. So if you look at that 8 weeks, let's say you received your funds on Friday, this past Friday, the 17th, you have to count that day. So if you haven't planned for that, that cost already is included. So that will give you, so let's say your check dates are on Fridays, how many Fridays you have during that 8-week period, you need to figure that out. If you're under the minimum, if you forecasted your payroll costs for the 8-week period and you're under the minimum of 75%, what's your plan of action? Are you gonna give bonuses during this time? Are you gonna see if your employees will do advanced pay? So maybe you offer them, you know, over the 8-week period, you spread out one additional payment cycle over that 8-week period, and they don't get paid the week after your 8-week period's up because you pay them throughout that period. You give them bonuses. Maybe the last paycheck of the 8-week cycle, you just double up their payroll, and again, they don't get a paycheck the following pay period. Maybe as of right now, there are no restrictions on owners taking payroll and increasing their wages. They just cannot exceed $100,000 for the year. So as of right now, that is an option. I don't know. We do not know if Congress and all that legislation will change and disallow that. But that is some of the steps that owners are going to have to take, is to increase their wages to cover the 75%. Again, we cannot guarantee that they will not change that rule, but that is an option right now. And then for employees that earn a salary over $100,000, calculate the payroll cost over the $100,000 to determine the amount excluded from the forgiveness calculation. Call us if you need help with that. And then don't forget that employer contribution on retirement plans, health insurance, and state tax assessed on wages all count towards payroll costs. So right now what you're doing, you're not even reviewing your other expenses. You just want to focus on the payroll expenses, the payroll costs first, and then you look at the other expenses. All right, now you're gonna look, now you reviewed your payroll expenses, you got to at least 75%. You wanna review your additional allowable expenses like rent, utilities, mortgage interest, and ensure that those are paid during the 8-week period. Remember, cash basis. Make sure payments are being made during the 8-week period. Turn off automatic payments if you have them for that period. I would pay them all out of the bank account that you set up too. Okay. Again, a reminder that more than 75% of loan proceeds can be used towards payroll costs up to 100%. So you could use your entire thing for just payroll costs. Other suggestions we have are to set up new accounts in your chart of accounts in your accounting system to track this expenses separately. So you're going to want to have things like, we're calling them COVID just for fun. But wages, FUTA tax, and all sorts of things. Rent, and just so you can separately account for them. Because remember, not only do you have to think of this for the forgiveness portion of the loan, but also for taxes and tax planning. These expenses have to be isolated. when you go to file your tax return and you do tax planning, we don't know exactly how they're going to be handled tax-wise, how they're going to be reported, but we assume they're not going to be deductible. So you have to completely exclude them. And if you don't have this set up now, your accounting is going to be a nightmare at the end of the year. So save your statements and invoices for all costs used towards the forgiveness. So be prepared to provide copies of bank statements, cancel checks, etc. Obviously your payroll reports.
Aaron.
Whoa, yes.
They have not finalized that at all related to the tax piece. So
no, they haven't.
That's completely wide open still. And we have no clue how that's going to be treated yet, which is a big problem.
So what we're doing with all of our clients, is to follow up on Jake's statement, is our thought is make the PPP loan and expenses costs as clear and defined as possible from the beginning. We don't want to have to look back in 3 months from now and try to figure it out. We want every week, we're going to be, every time one of our clients has a payroll, or every week we're updating, we have a six sheet spreadsheet that we're doing that all combines into one spreadsheet. This is how complex this is. And we're forecasting things out. We're doing actuals. We're going to be recording the expenses in every single time they have a payroll, exactly the way it needs to be, their rent payments. So you do not want to have to go back during the loan forgiveness application itself and try to figure this out. It's going to be very difficult, and you don't want to have to go back, figure it out during the tax planning and preparation process either. And remember that if you received an EIDL advance or grant, it will reduce the forgivable amount of the PPP loan. Okay, next polling question.
Erin, can you make Amber a co-host again? She had to restart her computer, so she can't help you.
Yep.
Can you hear me typing? Is it too loud? No? Okay. Otherwise I'd mute myself.
All right. I'm going to go through questions and see if I can help again.
Hold on, because there's there's some just a trend with some of the dates needed for filing the apps. If you want to just go over the dates that can be used.
Okay, so if you hold on, people still voting? Okay, so if you want to go ahead and apply for the application, yeah, I can touch on that really quick. For the second round, we recommend doing it immediately. Most banks are actually still accepting applications. So our opinion on the PPP second round of funding is, for all the banks that weren't able to get the first round of funding in, they're going to have those applications ready to go. So as soon as the law is signed in, SBA will open up their system. The banks will just hit send. So they're already going to have thousands of applications ready to go for the second round. And for all the applications, and a lot of banks are keeping their applications open right now. So those people are all getting processed and they'll be sent. So if you want to apply for the second round of PPP, do it today. Do not wait until they pass the law. Get your application in immediately. We have a few clients that decided for the second round. We're submitting those applications today to their banks. The periods that you use to determine your loan amount is, you can use the last 12 months prior to the application of the loan. So that's 4/1/19 to 3/31/20. So you take the total payroll, you divide by 12 and multiply by 2.5. Again, the payroll costs are everything I've already discussed with the health insurance and employer match and state taxes. Or you can take the calendar year 2019 and do the same thing. Take the total payroll, divide by 12, multiply by 2.5. Also remember, you're excluding any of the wages above and beyond $100,000 per employee. So it's 4/1/19 to 3/31/20, or calendar year 2019. You want to analyze your expenses and determine what period's the higher amount if you want to try to get the highest amount of the loan possible. Is that helpful? Okay. All right. So we're going to end polling. We're going to share it. Are you financially prepared to pay back the loan if it's not deemed forgivable? 78% of you said yes, 18% of you said no, and 4% didn't know this was a possibility. Okay. If anybody's a dog lover, I hope you like her. Also, have I turned into Batman this time? No, okay, good. Sometimes with this webinar, I turn into Batman, so I meant to give that as a warning ahead of time. Okay, so again, I'm not getting into calculations because it's way too complicated, but if you are not able to meet the 75% towards payroll cost, the FTE calculation, it is not like it's like an all or nothing situation. There are calculations to reduce the amount of forgiveness. So if you're going strictly off of FTE, let's say you're using 20 full-time employees as your amount, let's say your look back period was 20 full-time employees and you're only able to bring back 10, then you're reduced by 50% off the top. Then there's also, you cannot reduce any wages by more than 25%, then that also reduces it by another calculation. And also the total amount of payroll costs in general will reduce it. We are not clear if it reduces it from the 75%. So if you received a $100,000 loan and you have to meet $75,000 for payroll costs, we are not clear on some of these if they will reduce the $75,000 portion or reduce the full $100,000 portion on some of these. So that's something we're still trying to understand here. So for the full-time equivalent, your eligible forgiveness amount is subject to reduction based on reduction in the number of full-time employees, full-time equivalents, and or reduction amount of salary or wages for those employees by more than 25%. Regarding the reduction of salaries and wages, it cannot exceed 25% of the total salary or wages of the employee during the most recent full quarter, which the employee was employed before the 8-week period. The reason why we have a huge problem with this is that a quarter is 12 to 13 weeks, not 8 weeks. So how can you compare a full quarter with 8 weeks? You cannot. Thank you, Congress. So that's one of our questions we're still waiting to hear back on. And again, the forgiveness will be reduced by any of the EIDL grant or advance you received. So I don't really have a ton on what reduces the forgiveness. It's basically everything if you don't meet everything else I had discussed. And the calculations, again, are incredibly complex and they're actually not finalized. So this is the most information that I can give on this. It's not gonna be just a all or nothing thing, like I said. There will be calculations phasing out the forgiveness portion. Okay, I just wanna give some examples here. So what happens if you don't qualify for forgiveness? Loan payments start on the 7th of the month after the date of the note. I already discussed this. The date of the note I signed was April 10th. I have not received my funds. I have to start, if I do not get forgiveness or I only get partial forgiveness, my loan payments start the 7th month after I sign that note. So let's say you get an $85,000 PPP loan, or maybe you get $100,000, but you only get $15,000 forgiven. You're stuck with an $85,000 PPP loan. Your loan payment is going to be around $4,200 a month. $35,000 is going to be around $2,000 a month, and $150,000, you're on $8,500 a month. The huge problem that we see with this, obviously, is do you have the cash flow for these types of loan payments if you do not receive forgiveness or you only receive partial forgiveness? People were so excited and amped up to go apply for these loans. The day they came out, they didn't think of the aftermath. I kind of think of it as a kid going to college and they just take out student loans because they want to go to Northeastern and get the best school, and they don't care about what happens after, and then they go graduate from school and all crap, they can't even afford an apartment because all their student loan payments came up. This is the kind of situation here. You must be prepared to pay for these loans and these loan payments if you do not get full forgiveness or any forgiveness. Not to scare people, but that's how it is. You can refinance these loans. They say you can refinance with an EIDL loan. How that's going to happen, I have no idea, because the EIDL loan application process has completely changed. So we are not sure how it's going to work. And then also, if you go to let's say you want to go refinance it with a traditional lender, what traditional lender is going to refinance a company that's not doing well? So our recommendation, so remember when we said that the difference between a $100,000 loan and a $100,000 grant is how well you plan and document your spending over the 8-week period? Well, this is pretty much the purpose of this presentation. Are you willing to risk tens to hundreds of thousands of dollars on your own DIY accounting and forecasting? And again, this is not a sales pitch for us. It's just you need to be realistic about this and really understand that nothing is free. Because the way they built this legislation was not intended for the guy down the street from me to do this on their own and to make it an easy process at all. Unfortunately, that's what happened. If you do not plan on taking the necessary steps to ensure maximum forgiveness, we recommend you give the money back immediately. If this is just gonna put you in a worse position after the 8 weeks, give the money back. I know that's something you don't wanna hear, but that's our opinion. Bottom line, hire someone to help you for this. Do you have money to spend right now? Probably not. There's a lot of, we're offering payment plans for things, very, very, very good payment plan. Like, we're being very realistic here. We can't work for free for our clients either. Obviously, there's a lot that goes into this. You don't have to hire us, you can hire someone else. But if you have tens to $100,000 on the line here for a free forgivable loan, you have to have some skin in the game too. You have to invest a little bit to get this kind of money. So I know there's a ton of questions here. We are here to help. We're posting things on social media daily. We have a Facebook business owners group that we do recommend you just subscribe to and follow. We're trying to post things there daily. We have our phone number and our email address. You can also email covidhelp@straightline.com. And we're still applying people for the loans and do the planning portion of the forgiveness. Again, I'm not trying to make this a sales pitch whatsoever. We're just trying to give people the realistic idea here of what they're getting themselves into, and that there's things that we're confused on and we don't know the answers to. I can't imagine having no background in this type of work and trying to apply for forgiveness and deal with the federal government and compliance and getting the forgiveness that people are really entitled to. And I hate to see people put themselves in debt because they didn't want to try to retain some help to get them through this. So I'm going to go through the questions right now for the Q&A, and then we'll see if we can open up the floor. Okay. What defines additional expenses as it relates to utilities specifically? I read that gas for company vehicles is included. Is that correct? I have not read that. I don't know where you read that. I'm not sure about that. My understanding, it's like electricity. It's like NSTAR, Eversource gas, but
real utilities, not. I haven't seen anything related to auto expenses being paid out of the business.
I would not get liberal with this if I were you. Okay. I have hourly employees whose paychecks vary wildly due to time of year of business. So Diane, and how do I know how to pay them? I agree with you. The hourly employee, especially hourly and then like restaurants, are going to be very hard. Personally, what I would do, or what we're doing, is figure out what employees you want to bring back, how many hours they have to work, how much you have to pay them, and pay that for the 8-week period.
Let's go over Pia. Pia's got a good question. I don't know where you're starting from, but
Pia, wait,
you're
okay, at the top. I have 2 employees
because I think that's probably going to apply to quite a few people that are on.
Let me read it. I have 2 employees that are afraid to work. Plenty of hours for them. It's a small restaurant. I was told to pay them and everyone their regular pay to use up the load. So, do you want to give your feedback on it?
Yeah. So we have a lot of clients right now going through the same situation where they're either closed or they're partly open, especially restaurants that are doing just takeout right now. So the problem is we don't know when the state's going to open up. We have a tentative 5/4 date, which I personally think is going to get pushed out if it hasn't already. And that puts people that have already applied and received this money in a difficult spot, because your 8-week covered period is going to be dropped down to either 4, 5, or 6 weeks or less. So you've got less time to pay out these funds. So what we're kind of recommending is either you completely close or stay open and then add people back to payroll. And then you're going to end up pretty much paying people to either stay home and take a pay cut because of unemployment, but you're kind of in a tough spot with a decision to make. So I would say to throw them back on payroll, get them back working on some sort of schedule. And then if you're overpaying them in the short term, hopefully in the end that will work out well for you because you're kind of showing some loyalty with these employees. So we've had a lot of people call that are, especially we've got a ton of landscaping clients that have people that are just laid off from December to April anyway because of the seasons up here with the weather. And now they have a lot of employees that don't want to come back to work because they're also making that extra $600 on top of mass unemployment. So I would say to add them back, even though it seems like a waste of money in a way, but if you want to get this loan forgiven, it's probably best to schedule out this 8-week period that you have and budget accordingly. Because there's definitely some things that you could do to max out the forgivable calculation, if that helps. I don't even know if that's confusing what I just said, but let us know if that answers your question, Pia, because I think there's a lot of people in similar situations that are trying to time receiving the funds, spending the money within this period, that the SBA doesn't seem to be wanting to move with that 6/30 cutoff date. So to me, I feel like it should be your start date really should be the day that you're able to spend the money. And that's something that's just being pushed aside because of the state. So if you're closed or been definitely impacted because you can't be open, I don't see how. I think there's going to be some legal things that are going to pop up because people are going to push the limit on this related to that problem and say, I wasn't allowed to be open. What was I supposed to do? I applied for this loan. I didn't spend the money. I'm spending it now. Can I get this cover date pushed out, or is there a different way to get this forgiven? So I think that's going to be a problem. The SBA, we had a call over the weekend. They're sticking with that 6/30 deadline. They're not even, they're overwhelmed, and I don't think they're taking into account these specific little issues that are popping up that are turning into big problems for people. So we're poking as many holes in this as we can, but we're not sure which way they're going to go. And if they come out with even more requirements related to this next round of funding, if things are going to change again, because that may be an option too. That might be something that happens, but that's my take on that. I don't know. It's a difficult decision to make.
Okay, I want to answer Teresa's question. Can you guys recommend how to handle payroll for the employees that are earning over $100,000? If you have a separate bank account for the PPP loan and you're paying their forgivable amount out of that, and you pay the part that is over the $100,000 out of another account, can both show up on payroll so long as you have the checks to show the forgivable amount that came out of the PPP funds. So what we're, Teresa, basically, so what we're recommending for people if they have a separate bank account is to, like you said, to transfer the funds over that exclusively cover the forgivable portion, so that in your bank records you have that history. So you could, like, every week, if you have weekly payroll, you're going in, you're saying forgivable amount is this. You might have to do it by employee. You're only transferring the gross pay. Well, the gross pay plus the state tax, whatever your payroll system impounds, I guess, over. And that's what we're using as a way to prove that was paid, if that makes sense, Teresa. Anna, it says, what if you rehire a full-time employee then lay it off again after that? Someone asked a question like that earlier. We don't know what happens. Like, let's say your 8-week period's up 6/15 and you have to lay people off again. And by 6/30, you haven't hit that full-time equivalent, restored it. I don't know, because it's not clear if they are definitely going with the 8-week period for the full-time equivalent or going with the 6/30. I believe you have to have it fully restored by 6/30, but that's also one of my questions.
Yeah, that's how we're interpreting the wording with that. Because it's kind of vague. It's
Okay.
kind of left open.
Page, can I leave my employees on unemployment until closer to the end of my 8-week period to put them on payroll and use the 75% to pay them in advance? No, that's I believe that's unemployment fraud. You can't. Teresa actually probably would know this. If you're paying people advance pay, like and they're still on unemployment, I don't think you should do that. If you don't currently have employee health insurance or retirement plans, can you add them now? Yes. And use them for forgiveness. Yes. I actually think it's a good time to get that kind of stuff. Also, by the way, if you have like a profit sharing plan set up, like a 401k, and you do profit sharing, and like the owner, sometimes it can be a lot of money. Those are included as employer contributions. So just keep that in mind. So if you have a 401k plan and you normally do a profit sharing, but you wait till the end of the year to determine it, you might want to take the time to determine it now. And because that's considered payroll costs. And that can be a lot of money for some companies. I applied for a small loan, uploaded the forms last week and not heard anything. The loan amount I calculated is only for paychecks. That should cover 75%, right? I don't know. The amount of the loan is 2.5% of your payroll costs. So that, or 2.5 times, I should say, your payroll costs. So that's intended basically for 10 weeks or 8 weeks of payroll plus the additional costs out of pocket. So I don't know. I don't know your figures or anything like that, but probably not, to be honest. Paige, okay. If I want to rehire them towards the end of the 8 weeks, yes, but remember over the 8-week period, you have to get your average full-time employee count up, Paige. So if you just have 2 weeks of people working, but you have 8 periods, unless you somehow say you only have, if you're normally weekly, that's actually a really good question. I haven't thought of this. If you're normally a weekly, check date, and then during this time you switch to less than weekly, like you go to like monthly or something, I don't know if you're allowed to do that, because then, well, still you have a pay period. I think the FTE count is going to come into this, and you're not going to meet the threshold with the FTE count. That's what I don't think that. If we pay certain commissions monthly on the 15th of the following month after month end close, should or could we estimate the amount and pay it if allowed? Yeah. I would, Daryl. And Daryl, we have someone's going to be contacting you today to set up a planning call. Should you be reaching out to the bank to determine exactly what date does she usually for FTE? We received our funds, but I'd like to know. I absolutely would recommend reaching out to the bank to find out what they're doing for FTE and get it in writing, so you can hold it against them if they change their mind. Daryl asked, my corporation that applied for PPP pays rent to my LLC that owns the building, land, pays the mortgage, no formal lease, but years of track record of rent payments. You're technically supposed to have a lease set up. I mean, I believe that track records will be fine, because we have the same thing over here with our company. Daryl, we can talk about that more individually at a later time.
I think as long as you have the backup, they're gonna take the backup, because a lot of people don't have formal lease agreements for rent, especially, and we haven't even talked about the self-rental stuff, because that's these small businesses. Most small businesses, right.
If it's property, it's considered like a self-rental. I mean, if they don't include it, they're insane. Then I'll fight people. It's fine. I'm a sole proprietor. I'm the sole employee. Can I use the money towards quarterly payments and past and future rent utilities? Also, I am now just able to apply for unemployment. How will they affect my PPP? You cannot have unemployment and the PPP. The sole proprietor, we're not positive what you can use or how they're going to forgive it at all. Susan, honestly, I wish I could give you more answers right now. I guess what I recommend is maybe setting up a call with us early next week if you've already applied for it. And hopefully we have a lot more guidance on sole proprietors. That's actually what we're diving into starting tomorrow. Hopefully they issue more guidance because there's a lot of questions on sole proprietors.
There's no, like, if you're, say your monthly average net income is $2,000, your, whatever your loan is going to be, what is that, $4,500? Basically you're taking that cash and there's nothing right now that says you have to spend it on anything.
Yeah.
You just take the money.
Yeah.
So to us, that doesn't make sense. They're going to come back with saying you got to either do what the corps and businesses have to do and spend it on utilities, because they're basically saying that your net income is your wages, which is how they tax the sole proprietors.
Yeah.
But there's a lot of wiggle room with that, and how you interpret that is, I don't see how that's going to stick. I think they're going to change that. So there's not a lot of guidance on that right now.
Jackie, he's basically answering your question too. It's, you make over 100K, you limit it to 100K for like the loan and for, you know, the money you can spend, but we don't actually know how you spend the money or how you document it yet. So Jackie, I wish we're going to try to host a webinar. We are hosting one this Friday, really focusing on like more individual people and hopefully have information on sole proprietors during then. I really wish I could give more answers. It's really a terrible thing they've done, I think, a disservice to sole proprietors, to be perfectly honest. So you guys recommend applying bonuses to use up the funding to hit 75%, or just doing a payment in advance as long as it does not get your employees to hit over the 100K? I think whatever creative ways of paying your staff you can do, you should do it. There's nothing that says you can't right now. Bonuses, owner bonuses, get it. You're going to probably have to get creative, and maybe. And also, let's say you applied for the PPP loan and you're like, I have no idea how I'm going to spend these funds because I have people laid off and they don't want to come back because they're making more money on unemployment. Well, during the 8 weeks, you can probably pay them the same amount as they're on unemployment, or maybe more, which will entice them to come back. So that's kind of my opinion on that. Also, I will say, if you are an owner and you're going to use this, use like the extra, if you need to make up the 75% or whatever it is, and you're going to use an owner wages, again, we do not know. Right now you can. There's nothing wrong with it. You can hire, right now you can hire your spouse, you can hire your kid, you can hire your mother-in-law, whatever. That's of right now. I'm not recommending you do it, but you can. I don't know if it's going to be disallowed. If I was an owner, which I am, and increasing my wages to meet the thing, I'm actually going to just set some money aside just in case they disallow that at the end, to be perfectly honest. Okay. Sean Hanlon, do you know how long we have to request the forgiveness, i.e. 2 weeks after 6/30? I know the banks have 60 days to forgive it. I'm actually not positive when you have to submit it by. I don't know if anybody else, I don't think that's actually been told, or maybe it has and I just haven't paid attention to it. Sean, we can try to find that out. You know what? Nothing about the forgiveness application has been given at all. So that actually might not be available, but as soon as we know it, we'll tell. Okay, Bob, regarding profit sharing, and you have a cash balance account and funds were paid beginning of March 2020, but for 2019, could it be used to calculate the PPP check amount? I'm just digesting this question. You have a cash balance account and funds were paid beginning of March 2020, but for 2019, can it be used to calculate the PPP check amount? The loan amount? I'm confused.
I think he's talking about the balance.
Yeah, like he tax planned
profit
and
share.
Yeah,
I think.
I would give us a call individually. That's kind of question. If you hold on, it's bouncing around. If you rehire but at fewer hours salary but not more than 25%, can the employee still apply for partial unemployment as many hours are reduced? Many are reduced to hours. I'm assuming, but I don't know why you'd want to do this. If you're going to rehire them, I would just rehire them at the full amount. I mean, I get why you wouldn't want to, because you might not have work for them, but I think you're getting into a sticky situation personally if you have people collecting and you're doing the PPP. How do you handle submitting a PPP loan when your company has a management company that supplies the payroll funds, i.e. our payroll is the main company, but we pay bills and payroll out of company Y as a management company? Caitlin, I'm going to recommend that you give us a call because I want to make sure we're understanding your question completely. I heard you mention you could, including the profit sharing contribution of a 401k. How would this be done? You'd have to talk to your accountant about how to determine the profit sharing portion, but the profit share contribution of an employer is included in the payroll costs. I don't know if you're asking about how it's calculated or what. I know normally they're calculated at year end because it's the profit. So you might have to estimate. Right, Jake? Or
Yeah, that's
just
kind of
talk to
tricky
your
because we
accountant.
got to kind of average out what it would be over the 8 weeks, I guess. I'm assuming we haven't done one of those yet. But.
So Amy asked, can the loan be used for back pay and still count as forgivable? So Amy, again, this kind of goes with like the cash versus like accrual basis versions here. So we're just saying any expenses paid, you know, the checks are dated during the 8-week period. That's what we're assuming they mean by spending the costs. What you call that is up to you. Maybe they'll say the check dates are what you're paying, but if the pay period isn't within the range of the 8-week period, they won't count it. I don't know. I think it depends on how you label that in your payroll system. I don't, that's my opinion. It's kind of I know what you're saying. It's not a bad idea, but I don't know the answer to that. How do I calculate the number of FTE I have? Again, my employees are paid hourly and it varies a lot. I have roughly 17 employees total, that part-time and full-time. I would say I have 10 that get paid over 32 hours. This is a calculation. What you do is you choose one of the periods I mentioned. It's a February 15th. Diane, I'm happy to do a phone call with you. I know your company, you have a lot going on. There's a couple calculations you do, and you have to pull payroll reports and exclude overtime and count number of periods and hours worked during the total, you know, average. It's a whole calculation. Again, we're happy.
You want to be conservative with that.
You want to be conservative?
Initial count.
Yes, but it's not as, we had to create internal spreadsheets to calculate this. We can go over the calculation with you if you want. Can it be used for vacation pay? It can be used for vacation pay. So it can be used for any kind of pay, even if like you have a sick leave, as long as you're not getting the credits for. So you can do it for vacation pay, maternity leave, severance, any type of pay. So yeah, categorize all as vacation pay for your employees. There you go. They got a bonus, 8-week vacation on top of current month we just have. Sean, I already answered his questions. I wasn't sure about, that came in a while ago. All right, let me do that. Any contractors that are not run on payroll but invoiced, they are included? No, contractors are not included. They removed that. They removed that a long time ago. They got rid of counting subcontractors. John White, hi John. My business is operational right now. Crazy ring employees back. Can I ask for forgiveness of just rent and utilities? Also based on 100K loan, I could set 75K aside, use 25K for whatever. And then, so you cannot use the $25,000 for whatever. If you use any proceeds of the PPP loan that are not part of the allowable expenses, it is considered fraud. Can I ask for forgiveness? You will not be eligible for any type of forgiveness. I don't think if you only use it for rent and utilities. I could be wrong, but my understanding is the whole idea is to actually bring employees back. So
Say that again. What are you saying?
he's asking if he can just, based on a $100,000 loan, I could get $75,000 set aside, use $25,000 for whatever, and then pay back the $75,000 in lump sum and finance the balance for 18 months. I mean, yes, you're just not supposed to use the funds for anything else other than the allowable costs. I don't know how they're going to audit what you're using the funds for. You are able to take the loan and set it aside, yeah, and pay it or refinance it, absolutely. But I would just make sure you're using it for the allowable costs. So like, let's say you take the $75,000 and you start business back up in July, sure, you can use it. It's just not gonna be forgivable. And I don't know the answer about if you only use it for rent or utilities. I don't think any of it's gonna be forgivable at that point, because I think you have to do some payroll, but I'm not positive. Amber, you gonna say something?
Yeah, are you able to hear me okay? I know my speaker is really loud.
No, not really.
Okay, then I'll just type it to you.
Okay, in chat. Okay, I'm
The sole proprietor, that's capped at 100 grand, right? The loan. I forget off the top of my head.
the loan divided by 12 times 2.5. So $100,000, if you can only use 100 grand. No, well, is it the earnings plus you can add in the, yeah, $100,000 divided by 12 times 2.5. So you get $2,833, $20,833. John, I'm sorry if I didn't answer your question and fully the way you like, but we can find, we don't know if any of it's gonna be forgivable if you don't use it for payroll costs at all and you just use 25%. My understanding is no. We pay outside salespeople commission based on products they sell for each month, for us each month, and we usually pay those commissions out of our payroll account. However, these are salespeople or 1099 for us. I would put them on payroll. We have actually a couple of clients that have, I mean, they also have to meet the definition of of an employee, and according to Massachusetts, pretty much anybody, if you have somebody working for you as a subcontractor and they're in your industry, for example, let's say I hire a payroll processor or a bookkeeper, and they only work for me 3 hours a week, technically they're considered an employee by Massachusetts state law, even though, because they're in my field of business, basically. So most people in Massachusetts, the Massachusetts laws are actually much more strict than the federal employee classification rules. And I'm sure Teresa Barbadoro could probably get into this. She's a really, really good employment attorney. Lots of our clients use her. I think she's been on the webinar. But if you have people you're 1099ing and they're in your industry, and there are certain industries that are exempt, like, or for the employee classification, but they could be added, they should be added to your, as employees anyways. Right, Amber? Would you agree? Yeah.
Amber just made a good point. I think I'm pretty sure I agree. I'm just trying to think that you have to use at least 75% towards payroll to get any amount forgiven. To double check the wording, but
yeah, because they also changed that.
Yeah, but that sounds about right.
Beth, do I have to give the employees their vacation pay now? Like according to your policy, or I'm not really sure on the question. I mean, you can just triple their vacation time, I guess.
Yeah, Teresa just threw a response in there.
Okay.
Kind of related to, I forget the guy's name. He was asking about kind of banking some money with not using the full 100 and doing something with the 25%. But when you apply, you're certifying that you're going to use the money in the correct way based off the loan program. So it's basically bank fraud.
Yes.
If you don't do that.
And again, if anybody wants specifically to discuss any type of like employment related issues and HR issues, Teresa Barbadoro with Baker Braverman Barbadoro is actually fantastic. She's done other webinars with us, and I make no money off referring her, just letting you know. I just think she's great. She's out of Quincy. She's helped a lot of our clients out. Will you get forgiveness if you don't bring back all full-timers? For instance, the 2019 pay period you used to apply, what if you had hired a few employees part-time that worked once or twice and fired them all? So how the employee count works is you take all hours paid during those periods you chose from, you divide by the number of hours in the total pay periods, and that gives you, so you are counting so let's say you hired 3 teenagers and they worked 3 hours each, a couple weeks during the look back period, those hours are counted, but they're all divided by the 40 hours times the number of pay periods. It's very complex.
There's more to it than that, though. It's just not that piece.
How many people do we still have on? Do we know?
92.
All right, good. So we'll keep going. All right. Okay. So basically, if you think of it this way, let's say you have 2 people that work on average 20 hours a week. They would equal 1 full-time employee. If you're just looking at 1 week, okay, a snapshot of 1 week. Okay, if you have 4 people that work 10 hours a week, that's 1 employee, 1 full-time equivalent for 1 week's worth of pay. But you're also looking at different pay periods. So it's not, so that could be less given the number of pay periods you're looking at, if that makes any sense. Employee health insurance is a group plan billed to company, but normally funded by employees. Can PPP funds received be temporarily paid for health insurance premiums? So you could, this is actually I kind of like this idea. You just made me think of it, Kim. So normally when you have group health insurance for your company, your employees pay a portion of it. You deduct the employee's portion pre-tax, and then you have the employer portion that you pay that you're responsible for. So what I believe Kim is asking is, I think she's saying, do we stop deducting it from the employees? So basically they're getting 8 weeks of insurance fully covered by the employer, and then it is included with the payroll costs. Yes, I actually think that's a nice idea to increase, but either way, it's still, I was just thinking the wash, but no, you're right. Yep. So yeah. Mm-hmm. If you didn't understand that, please let me know. Thanks, John. And okay.
Can I use the money?
Okay. Do we have anybody that's raised their hands?
We did earlier, but so a lot of people are asking about prepaying expenses or applying these loan funds towards accrued expenses that have built up. Like if you've got a gym that's now closed and you still have utilities and rent that's still due, if that's going to apply. We're basing that off of the 8-week covered period right now. So the answer is anything prior to that 8-week cover period is right now, no, you won't be able to.
So I guess, like, let's say you've had a utility bill you couldn't pay because you had no money, during this time until you receive the funds, and then you go pay the whole bill.
Yeah, but are they going to only use the dates during the cover period? Are they going to use the full amount that you paid for? That's the thing. We don't know.
So we believe there's not going to be a way that banks are going to be able to break down like accrued, prepaid, all this stuff. But I think you have, I don't think you can go ahead and pay 12 months worth of rent. I think that if you missed payments before you got the loan and you're paying it now during the 8-week period that are under the allowable, I think that should be covered, but I don't know the exact answer for that.
I still am reading this that there's a choice that has to be made related to either the incurred costs or the actual payments made that are clearing the bank that you can show canceled checks for. But we had that call over the weekend, or the emails going back and forth with the SBA lady. And it sounds like banks are just probably going to use the black and white, what's cleared during the covered period. So we don't know.
Melissa Lent,
give people the option.
So date that cleared the bank or date the check written?
Say that again.
I would go I would personally go with date it cleared the bank, because you're going to have to provide proof.
Yeah.
I'm just going to, Diane, we'd love to talk to you. We can actually have one of our team members reach out to you directly. You can email, you can go to our website, straightline.com. Remember, it's spelled weird. And request a phone call, or we have your contact information. We can give you a call right after this to set up a time. Have you already applied for the PPP, Diane? Either way, we can help. Okay, cool. Then this is a good time. Yeah. Yep. So we can set up a time. The expectations of them rolling out a second round. Someone just made that go away, but okay.
I just responded already. Sorry.
To what? Oh, well, so I guess I do want to talk about the second round of funding. If you didn't make it, or your bank chose to service higher net worth clients, and put smaller businesses on the back burner like most banks did. We do believe that the funding will be passed by tomorrow. Hopefully they can get their heads out of their butts and pass it. I don't know the exact amount. It started at 250 billion. I think it's up to 310 billion at this point. I also understand they're going to be doing additional funding for the EIDL program. My opinion on the second round of funding, like I said earlier, is if you want to apply for it, do it today. Submit the information today to your bank. Do not wait until they do it, because these banks, like I said, are still accepting applications, processing, and they are going to just hit the send button as soon as the SBA opens. And I believe the funds will be gone so fast, it's unreal because of this, because the banks are ready to go. And the good thing is, I'm hoping that because they've gotten so much scrutiny for how they handled the first round with all these lovely gigantic companies getting the funding, I really, really do hope they focus on the small business. And I hope that they focus and we get a lot more answers on sole proprietors today or tomorrow, because I feel like those are the ones that are really suffering and have no answers.
They always get screwed every time.
They always get screwed.
Every time.
You can give your employee a raise. Yes, Amy. You can count it as a bonus. You give them a raise. Absolutely. Thanks, Scott. You rock too. Are you able to apply to multiple banks for funding? We were told to apply. I personally don't think you should, because if your EIN is caught up in the system, the SBA will get, I think it'll delay it. What I will say though, however, let's say you applied last week or with the first round of funding and your bank didn't process it in time. You have a couple options. You can go ahead and tell your bank to screw off and request that you pull your application out of the running, I guess you call it, and then go with another bank. I personally think that really, really small banks, like Martha's Vineyard Savings Bank, credit unions, process them the best for small businesses. They did it the faster. The bigger banks like Bank of America and Citizens, they're Bank of America and Citizens. There you go. How about that? The mid-sized banks, Eastern and Rockland, that's who we primarily process with. And I love those banks. I have excellent relationships with them. I think the only problem that they had is that they had such a large customer base, much larger than, the smaller banks, that they were overwhelmed with customers submitting applications, but they were small enough not to have the infrastructure in place to be able to process the loans as quickly as other places. Radius, yes, Radius Bank is, yes, Webster, thank you, Teresa. Webster Bank and Radius Bank are helping non-clients. So we're actually trying to figure out if we want to keep some of our clients' applications within the existing, like within Citizens or Bank of America, for example, or go to other lenders. In addition to what Teresa just said, she said there's also some banks that are helping non-clients, Webster Bank and Radius Bank. I will say that there's also non-traditional lenders like Fundera, PayPal, Fundbox, Cabbage that are accepting loan applications as well. And I've heard mixed reviews on both. I really think it's a hit or miss, and there was no rhyme or reason to how things were submitted, personally, except unless you had a high net worth, then the rhyme or reason was there. And again, I want to reiterate this. I said at the beginning, if you have applied for the PPP and you're waiting to get funding, or you've received funding, but you do not intend on taking the proper steps to maximize forgiveness, I think you should give the money back. I think it's a bad idea for you to keep it, because you're just going to be strapped with a huge loan that you can't afford in a couple months.
Yeah. We don't know if there's a lot of talk about it. You'll be able to convert it into one of those economic hardship loans through the SBA, but there's the requirements for those types of loans, just based off the website, there's not a lot of information there to see if you'd even qualify as claiming to claim a hardship to be able to convert that loan over. It's a much better, the terms are much better, but I don't know if it's worth taking that gamble.
And also, if you are getting this loan, but you don't, and you're not willing to do the maximum forgiveness thing, and you don't really need the funds, then you probably shouldn't take it. And there's businesses out there that truly need it. And the whole thing with the Sherbert company, or whatever company that was, that returned the funds out of the altruism of their heart, it's crap. okay? They obviously did it because it's great PR spin, but they obviously did it because they can't bring their employees back to work, and they've realized they couldn't get $10 million forgiven.
Yeah, if you've never heard of the Shake Shack, you have now. So that was
So there you
smart
go.
on their part.
That's my opinion on that. They have great PR people though. Anyways, I'm gonna there's 3 people that have raised their hands. Michael Duffy. I unmuted you. I did not unmute you. Hold on. Did I unmute you? Hold on, Michael. I'm sorry if you're just talking into a microphone that's not doing anything right now. I keep hitting unmute. Amber, can you, oh, there we go.
Audio settings.
All right, Michael, we got it.
Hey guys, sorry. Actually, Jake answered my question, but I appreciate it, everything that you're doing. Thank you so much.
Thanks, Michael. All right, I'm gonna lower hand. Okay, Paige Etheridge. Okay, I did it. Paige Etheridge.
Yes, ma'am.
Oh, do you have a question? Sorry, I don't know if we can hear you.
No, I didn't. No, ma'am. You answered my question.
Okay, great. Okay, and then Paige Papiano. Oh, I'm sorry. I keep clicking it and it's not.
Got
It's
it.
delayed.
Thank you.
Okay, sorry, Paige Papiano. Is that how you say it?
Yep, that's it exactly, actually.
Yeah, look at that.
Great job. Thank you for all the information. It's really helpful. I'm an accountant, so I'm helping, a bunch of my clients with this. So my question was in regards to one of my clients who didn't have any payroll in 2019, even though they were an established company. They just started payroll January 1st of this year. So I wanted to see if the banks will count only Q1 and kind of annualize that. Or if they will use a trailing 12 months to calculate the loan amount.
So the only way they can use the first 2 months of 2020 is if they were a new business. So we have this circumstance with actually quite a few of our clients too. And they're going to annualize it over the 12. They're going to take like the payroll from January 1st through whenever, this year, and then they will annualize it over the 12 months, unfortunately.
Okay. All right. Perfect. Thank you.
There's a lot of people kicking themselves right now because they either decided not to run payroll in 2019 or they really limited their wages and took huge distributions instead.
Mm-hmm.
And now this is coming back to bite them because they could be paying themselves for 2 months for free, essentially.
Right. So then what happens if they were self-employed because they were contractors for the company in 2019 and then January 1st they're converted to an employee?
And so are they an S Corp or like a sole proprietor?
The company is an S Corp, but the employees were, consultant level. So they were not employees as of 2019 because there wasn't much business activity. Mm-hmm. And now that the business has, they have subsidiaries and the subsidiaries are now making money. So now they can afford to pay them on salaries. Now they've proven their worth.
So because they're an S Corp, they're still going to have to go over to the wages that was paid over the past, the prior 12 months and average that. If it was
individuals better off going as self-employed and since they're not being paid on payroll now?
Well, they could do both technically. So that individuals could go apply for the PPP because for 2019, right? And use those. Yeah. And then the company itself could use the 2020 wages, annualize it.
Hopefully that averages out.
Yeah. Okay. So I guess in essence, they're quote unquote double dipping, but not really because if, obviously they didn't have 12 months worth of quote unquote wages. Right. But the rules are there. That's what. Yeah.
Thank you.
Yeah, of course. Hey, thanks for coming or joining, not coming. Anyways.
And there's a chat question in the Q&A that I was thinking Teresa might actually better answer. Anyway, we could let Teresa speak on that. Or Teresa, do you mind?
You want me to read it?
Teresa, the question is it possible we might have an HR issue if raises are not given across the board, or is it okay to issue certain employees on a case-by-case basis? I have an opinion on this, but if Teresa wanted to talk, we could unmute her. But
I don't think Teresa didn't know she was going to be working this morning.
Her advice is not to be taken. She
said sure. Yep.
She has a disclaimer too. Hold on. Can you unmute her or can you not?
Yep, I sure can.
She is the expert when it comes to this stuff. So
Thanks, Teresa.
Hi guys, can you hear me?
Yeah,
Sure
thanks,
can.
Teresa.
Hi. Happy to help. So if you want to give raises, I think you'd have to have some reasonable basis for why certain people got them and other people didn't. You can't just say, well, I'm going to give it to these 3 people for the hell of it. You gotta have some reasonable basis for why you gave them to certain people and not others. Something that's defendable and justifiable. And obviously you have to pay particular attention that you don't give them to certain groups, meaning, you know, only to women or only to, you know, people who have kids or something, anything that can be a definable group, right? So you want to make sure you A, avoid definable groups, and B, have a basis. If you're doing it based on just seniority, I think that would probably be acceptable. These people have been with the company 5 years or longer or something like that. But just have some kind of rational basis as to why you did it a certain way.
Irene, she asked, I suppose this would apply to bonuses given as well. I'm going to go ahead and assume the same thing.
Yeah.
Yeah. Do you have any other input you want to give on, or to correct us on anything else we went over?
No, you guys did an awesome job. I do know the question came up about what to do with people who refuse to come back to work.
Oh, thank you. Yes.
And this one, I've dealt with this a couple times already as well, and I reached out to the Attorney General for some guidance on it. And the big issues we found were, you know, obviously the first issue is people that just are collecting more on unemployment, that want to keep collecting unemployment. That obviously is not something you can tolerate as an employer. If you have somebody who is saying that they just don't want to come back, and you have work for them, or you have, you know, payroll for them under PPP, and they just refuse to come back, as I think Jake said this, you can report them to unemployment and say, look, I've offered this person their rollback, they're refusing to come back, and then they would no longer receive their unemployment. But the second issue is the one that I think is a little trickier. If you've got someone who claims that they are sort of afraid to come back to work because of COVID-19, the guidance I received from the Attorney General's office was, if there's a reasonable basis for that, meaning either they have a pre-existing condition, they live with someone with a significant pre-existing condition, or they are at a high risk group, meaning they're over 65 or something like that, then at that point, what you can do is kick them over to the FFCA paid leave that they can get for, I think it's 2 weeks of paid leave they can get. So you can give them that option and you can claim the credit there. It's going to run into an issue for you on PPP in terms of keeping your people on payroll. So you have to, because you can't double dip. You can't claim, you know, using PPP for them as well as getting the credit under FFCA. So you'd have to pick one or the other. But as long as you brought them back within a certain time period, that's one way to kind of play with those couple issues. But then if you've got someone who just says, even after the 2 weeks, they're not willing to come back, at that point, it would be considered a resignation. If you've already tried to be as accommodating as you can be, and they've already exhausted their other options, at that point, they would have to go to unemployment and then state their case to unemployment as to why it's unreasonable for them to return.
Hey, Teresa, I have a question about that. If they go on the employer credit, and I think I already know the answer, but let's say you bring them back. I obviously know that you can't count the wages paid towards PPP.
Right.
You can't count them towards the FTE either though, right?
I don't believe so. No.
Yeah, it's like completely excluded.
Yeah, I think it's completely excluded. Yep.
Yeah, okay. Thanks, Teresa. Again, she works for Baker, Braverman, Barbadoro. She's a fantastic attorney. Their whole firm is awesome. I didn't know she was going to be on this, and I'm glad she is. So if anybody, handbook, whatever, go to Teresa. She's fine.
Well, thank you guys. This has been a great seminar. I've learned a lot as well. So
Thank you
guys for the accounting stuff.
Thank you. Joel, sorry, we noticed that you had your hand up before. Do you still want to speak, or is it just about the 10K grants? I'll just unmute you. Joel
Hi.
Shapiro, you're on.
Hi, can you hear me now?
Oh, we can.
Yeah, I just had, when the 10K original disaster grant came out, I applied right away, but I've never heard anything. Is there any way you could follow up? I got a confirmation number, but I've got nothing since.
So when did you apply when they simplified the application, or when they had like the really complex one?
No, it was simplified. It was just 2 pages. It was very, very simple.
So you must have done it like around March 29th-ish.
I'm guessing, yes.
So there's no way to check on it. I will tell you that I actually just got funds for I have 3 entities, and I got 2 of the entities today. So there's no way to check on it, and they are basing it on employee count, which they didn't tell us before. So if you went in, they basically lied. It's not a $10,000 advance grant. It's $1,000 per employee. If you went in there and you applied and you put 0 employees, because the definition of an employee is completely different from what they define one as. Like I did one, I had 0 employees technically, because I actually got $1,000. They must have just given it to me. They counted as 1, but unfortunately there's no way of knowing. I know they're refunding they're supposed to pass it, refunding it, like to not refund it, to fund it, additional funding. Again,
I think that they're tying that to the PPP applications.
Somehow, I
That
don't.
EIDL.
I don't know.
We only know of a few people that have gotten that money. Out of all of those advance filings that we did, I don't even know would we have one person?
I don't know. 2
And I've
now.
only heard of one other person that's gotten it. That's not a client or somebody that we worked with. So I think they're tying.
Diane got the advance and she was approved. I don't know, because I didn't do a PPP for one of my entities and I got it. So I don't really know. I think it's all a big guess, unfortunately, Joel, but hopefully you will be seeing it soon. I will say about the EIDL, my opinion is if they do put more funding in it and you do not qualify for the PPP program and you did not apply for the EIDL, I do think it's a good idea to apply for. I think the advance you receive is why not try it? And then if you're a sole proprietor and it's not worth trying to do the PPP, Massachusetts just yesterday announced you can go apply for the PUA, the Pandemic Unemployment Assistance Program. If you're a sole proprietor and get the EIDL, that might be the best way to float yourself through this until you can get back on your feet. It seems like if you give raises during 8 weeks to increase payroll for fewer people to get to the 75% without all FTE is okay, as long as you rehire. I agree with you. I just don't know, Anna, I apologize if I'm butchering your name. We just don't know if the banks will use both the 630 and the 8-week period, or one or the other. I don't know if that answered your question.
Thanks, Amber.
What?
Inside joke. Don't worry about it.
Okay.
She's just helping answer some unemployment.
Caitlin said she got the advance last week, but nothing out of PPP. All right.
I could have sworn I read that somewhere that they were tying that EIDL to the PPP stuff, but maybe not. It's just it's all over the place. So you can't tell what they're doing with it.
I know we aren't answering a lot of sole proprietor questions today, but James Clark said that he's been approved for the PPP loan through his bank, but he hasn't received the amount or details. He's a sole prop and he's completely shut down. He's thinking about applying for unemployment and is asking if there would be a conflict. I do believe there would be a conflict there, right? If you get the PPP and you're on unemployment, you would have to come off of unemployment.
You just have to come off unemployment at that time.
Yeah,
you can
timing wise.
If the PPP, so also let's say you're a sole proprietor or a company that qualified for a really low PPP, and let's say your EIDL grant is actually more than your PPP, just give the PPP funds back, because the EIDL is either equal to or more than your PPP. You don't have to pay the EIDL grant advance back, but so or you use both and you're going to have to expect to pay the PPP back, if that makes any sense. So let's say you're eligible for $7,000 EIDL advance, but you're only eligible for a $6,500 PPP loan.
What bank?
Huh?
What bank is he using? Do we know?
We do not.
Okay.
It's like a timing issue too. You want to.
Diane, if you want to talk about being an S corp, absolutely call us. That's what our specialty.
Joel, to answer your question, the new MASS program that was brought up is actually a federal program. It's Pandemic Unemployment Assistance. So it's basically federal unemployment for sole proprietors, Schedule Cs, things like that, that aren't on payroll. It's for that $600 a week that everybody's kind of been talking about through July 31st.
So you can go ahead, if you're a sole proprietor and you're not eligible for like traditional Massachusetts unemployment assistance, you can actually go apply for their apply there and for the $600 a week. Or if you're not a webinar and you're an S corp and you just never paid yourself wages, then you can go apply for it too.
We are doing a webinar about all of those individual things, including that pandemic.
On Friday.
It's on Friday.
Diane, what benefits come from being an S corp? I'm not sure if you're talking about for the PPP or in general. There's tons of benefits. This is like what we focus on for our clients is actually making sure everybody is the proper entity for their situation. There's a lot of benefits to being an S Corp. I'd say 90% of our clients are, as long as they meet certain criteria.
Yeah, with the way that the tax code is written now, if you own a business, it makes the most sense to incorporate at some point, depending on what your income looks like from the business. But we used to recommend that around like 55, 60 grand net for Schedule Cs, like people that are sole proprietors, but that's kind of changing now. And we have a lot of people that are doing it early for a bunch of different reasons, but it could be insurance related, it could be tax related. There's several different reasons why you'd want to incorporate, but to me, it's the most popular thing to do right now based on how the tax code's written. You get the most bang for your buck.
Yeah, the most popular entity type, if you're doing your taxes properly, is an S Corp or like an LLC elected S Corp. Is a PUA the same thing as a $600 coming from the state unemployment backed by federal? Yes, it is. It's just for people for self-employed people, Sean, that didn't have, like, were not in the system at all, never paid in wages, they were not able to apply for it until yesterday. Joel, is it my opinion? In your opinion, is it too late? No, we actually have 4 more clients who are applying today. I will say you should apply today, like with your bank, even though they haven't passed it yet. Because of, like I said, I think that the funds will run out right away. But I also don't know that they also, because they haven't passed the rules and all the issues that's come up with all these giant companies getting approved, they might change the rules that will, like, not allow those large companies to be eligible for the PPP.
Yeah.
I don't know though.
They really need like a new classification for what a small business is. Cause to me, 500 employees is not a small business. They almost need like a micro small business.
Yeah, we're considered, most people in that, like, most small businesses are considered micro businesses. I mean, James Clark, I'm a sole proprietor and I've applied for the unemployment yesterday. I also applied for the PPP, just been approved, but I haven't received the details. It depends. I don't know what you were approved for the PPP. So we also don't know, like we said, on the forgiveness aspect, if the amount was super low, I would probably just.
He's going to get, well, what's the date? It's the 21st. I think it's roughly $7,800 for unemployment, right? If it's 13 weeks times $600 plus, because he's not paying in. So it depends on what he filed for the application.
We're doing planning for clients, like they call and if they don't qualify, we're doing not just the PPP planning, but the other aspects of the planning if we don't think the PPP is a good idea. Debbie, hi. Is there a cap on how much above 75% PPP loan you are allowed to spend on payroll? And no, you can spend 100% on payroll costs. Payroll costs, again, are not just gross wages. It's gross wages plus state tax assessed on wages, employer health insurance amounts, and simple and retirement plan contributions. Talking a lot. Anybody else have specific questions? So again, I will reiterate, I do think the PPP program is a really good program to apply for if you are able to maximize the benefits of the forgiveness. If you are not willing to put in the time and or pay somebody to understand it, to plan with you, I think you're kind of silly to take it, and you should try to find other routes of getting funding. Unless you want to just get it and use for the allowable costs and then refinance it and but you have to use it for the costs. Again, the way we're doing planning, we have a 6-sheet spreadsheet that all, like, with forecasting, FTE calculations, projections, and all sorts of things that combines into one. So this isn't, we did a 2-hour training yesterday for our staff, and we understand it a lot more than probably most people, and it's still very complicated. So we just don't want people getting into these things that really can't handle applying and getting the forgiveness. I just don't want to see people put themselves in bad positions. All right, I don't think we have any more questions. Any more questions? We still have 52 people on. Again, this will be made available. If you haven't joined our Facebook group, please do so. It will be making this available, but you'll get an email. Please check your spam for our emails. For some reason, a lot of stuff with the PPP and all that stuff's getting filtered. So check your junk email. We're sending stuff out a lot about this. We try to just be informational, not spammy. But we will be emailing it, as well as providing all the links through our Facebook group and Facebook page and our website. And again, we're hosting another webinar on Friday. It's supposed to be 10:30, but I might have to adjust the time about the more individual side / sole proprietor side. So thanks, Diane. Same here. All right. Are we good, everybody? You guys have any last things to say?
Just if you haven't applied yet and you're thinking about doing it, to get your info together and ready to go and sent off like as soon as possible, just because we have no idea what's going to happen with this. Hopefully it gets voted on this week and gets passed, and then the banks will be funding all these loans again, but we don't know.
I will say, because there's a lot of our clients still left on here, if you went through Straightline to have us apply you for the loan as well as the forgiveness, all of the stuff I'm talking about, I did during this presentation, is actually included with the package that you paid for. If you went separately, it's not included. But so if you're like, oh my God, I have so much to do, don't worry. If you went through us and you signed our engagement letter and all that, this is all part of the planning process. If you haven't heard from our team yet, you're going to in the next day or so. So
I would say for all of you that aren't our clients on here, that doesn't mean you can't reach out to us for help. Feel free to email us your questions. It might take a day or two to get back, but we'll try to answer you as quick as possible.
And if you do have specific questions and we say, please book a call, it's just because some of them are just really difficult to just answer via email, and it's not always the best way to go. Thanks, Michael. Thanks, Teresa.
Oh, we do have a hand raised.
We do.
Diane Struby.
Diane Strube. Diane. Oh, I'm still trying to unmute. It doesn't like me.
No,
Diane?
I pushed that by mistake. I'm sorry.
You're fine.
Bye.
Oh, thanks, Diane.
Thanks.
Maybe I should call people out. No, I'm just kidding. All right, well, I think we're good. Everybody's hopping off. So thank you so much for attending, and just be on the lookout for our webinars. I hope you find them helpful. We are here, and good luck with everything, guys.